Hello and welcome to a Smaulgld precious metal update. Today we're going to be looking at the second quarter Royal Canadian Mint silver and gold sales. So the Canadian Mint reports on a quarterly basis, which means they put out an annual report, not just their gold and silver sale bullion numbers, but they produce a report which takes them a while to put together and generally comes out 6 to 8 weeks at the end of the quarter. So these sales figures only include what they've sold through the end of June. They do not include any July or August numbers as we have now for the US Mint. We have the July and partial August numbers. The Perth Mint, we have the July numbers too. So the Royal Canadian Mint sold 8.4 million ounces of silver in the second quarter of 2016. That was up 24% from the comparable quarter in 2015 when they sold 6.8 million. Now in the first quarter of 2016, the Royal Canadian Mint set a record for selling silver. They sold 10.6 million ounces. So the sales in the second quarter were down from 10.6 million ounces to 8.4 million ounces. Granted, they were at the highest rate ever in the first quarter, but we have seen some slowdown in the second quarter, and I suspect that has to do with some post-selling, lower sales in the second half of the quarter. For example, the United States Mint had a very strong first quarter, a record quarter. In the second quarter, they sold well in April and May, and in June they saw a fall off in sales to about 2.8 million, and since then we've seen a further fall off in July and then down to August. This number has increased a bit to about 1 million, but July and August sales are less than half of what they were in January, February, March, April, and May. Now, we don't know what the Canadian Mint's July and August sales are, and we won't know that probably until sometime in November when they report their end of third quarter sales at the end of September. However, we do know, now the Canadian Mint produced this report recently, even though it only covers to the end of June, they did make a note, and it kind of confirmed something that I've been saying, that physical demand for gold and silver goes down when the price rises. We've seen that in Asia. We've seen the Shanghai Gold Exchange withdrawals, which are a good proxy of physical gold demand in China, down 25% this year as the price has risen. And we've also seen in India the import rates are down 40-50% this year, year over year. So as the price gets higher, physical buyers tend to buy less. Makes sense, because when things are on sale, people buy more, and when things go higher, they buy less. However, Western paper traders like to chase things that are going higher, and we've seen that as the price of silver and gold have risen, we've seen even greater and greater interest in gold ETFs, and the money's flowing into those gold ETFs hit record levels this year. So what the Canadian Mint noted was that post-Brexit, now the Brexit vote was on June 23rd, and many expected that vote not to. They expected the Remain vote to win, not the Leave vote. And when the Leave vote was announced, that sent gold and silver prices much higher. What the Canadian Mint noted was that even though gold and silver prices jumped significantly after the Brexit vote, it has not yet translated into a material increase in bullion demand. Again, it makes sense if you can look at the chart here. Silver had been rising all year, but then when that Brexit vote came out, boom, we saw a nice increase. And I think many silver stackers, people who are buying physical metals, have been buying like mad during the period of time when the price of silver was in the $13, $14 range. They viewed the Brexit vote and the price increase as manna from heaven, and they're going to sit back and watch and let the price go higher. No need to buy the silver at a price when it's $2, $3, $4 higher than at what you bought it, because the idea of buying anything is usually to buy low and sell high, and basically not to keep buying. However, I do think that if the prices were to continue to rise, you will see momentum playing even in the physical side. But right now, I think what you're seeing is a decline in demand for physical just because the price has risen. If we go down and look at the Canadian Mint silver to gold sales ratio, one of the things we've noted over the past 3 or 4 years is the large amount of silver sold on a relative basis to gold in terms of ounces. The dollar amounts haven't been that great, but there have been at the U.S. Mint at one point last year, they were selling over 100, 120 ounces of silver to every ounce of gold. And that number has come down. And as the price of silver rises, there becomes also greater interest in gold as the gold silver ratio comes down. But in the first quarter, the Canadian Mint sold 10.6 million ounces, and they sold 212,000 ounces of gold for a silver to gold sales ratio of 49.50 to 1, about 50 to 1. Now in the second quarter, as the gold silver ratio fell, the silver to gold sales ratio also fell. The Canadian Mint sold 8.4 million ounces of silver, which was down from 10.6 million ounces of silver. But they sold more gold in the second quarter than they sold in the first quarter. They sold 251,000 ounces of gold in the second quarter. So the silver to gold sales ratio was 33 to 1, way down from 50 to 1. Canadian Mint, just to point out, has become a powerhouse in sovereign mints in terms of selling the amount of silver that they've managed to increase those sales from 680,000 ounces in 2004 all the way up to 34.3 million ounces in 2015. After the first 6 months, they're at 19 million ounces. However, I don't expect them to double that this year and set another record. That would make them go from 19 to 19 to be 38 million ounces. It looks like that the July and August sales are probably lower than they've been all year, so we'll probably see a pullback. And I don't anticipate there being any drastic increases in physical buying in silver unless we see another dramatic drop in the price. In other words, if the price would go back down to the $15, $16 level, certainly there would be people who would move back in. Or if the price starts to take off, you may see an increase in buying as well. Or if there's some type of calamity, some type of financial collapse, you would also see probably some increase in physical buying. Please remember to sign up for Smaulgld. You can go right up to the top here and put your email in. It's free. You will get the updates as they come out. Also tomorrow we will be releasing more thorough analysis of the gold sales at the Canadian Mint. You'll get that right to your inbox. So please sign up for smaulgld.com. There's plenty of information here. At the beginning of the podcast, you could see, if you click on all the top here, you can do your research by checking out for example, the Russia and gold archives, the Chinese and gold archives, where we do the monthly reports of the amount of gold that the Russian and Chinese central banks are buying. We update the gold reserves by country top 40 as soon as not just every month, but as soon as Russia and China add to their gold reserves. In any event, if you sign up for Smaulgld, you will get the important blog posts sent to you when they come out. I don't always do a YouTube video to cover each blog post, so if you're only subscribed to the YouTube channel, you may be missing a lot of information. So please sign up for Smaulgld here, and also sign up for or subscribe to the Smaulgld YouTube channel. Thanks everyone for listening, and we'll talk to you tomorrow.